Hello, good afternoon. You're tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. This is a show where we solve all your stock-related queries, and we're going to be doing just that. But before that, let's take a look at the markets. Managing to hold on to gains of almost 150 points right now is what the Nifty 50 is at. Just slightly below 26,300, or around 26,300 levels is what the Nifty 50 is trading at. At one point of time, it was very close to those record high levels. So we'll watch out for what's going to be happening in the second half of the trading session. Nifty Bank in the intraday trading session today did touch those record high levels. Nifty Bank as of now is holding on to gains of almost 0.6% as well. Broader end of the market is doing much better than the benchmark indices, outperforming there. So Nifty mid and small cap both managing to hold on to gains of 0.8 to 0.9% in the trading session. What's not doing well today is only the FMCG pack. So Nifty FMCG is the one sector that's trading in the red. But that's the market setup for today. Good advance decline ratio on the advances side versus decline. On that note, let's get started with all those stock-related queries. And to solve all those queries that you all have sent us, we have our independent market expert, Shahina Mukadam, as well as Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher, joining us to answer all those doubts. Vaishali, as well as Shahina, good afternoon and a happy Friday to both of you all. New Year seems like it's starting on a good note, 26,300 levels. Vaishali, just a quick check in terms of the market.
Very good afternoon, all of you, and best wishes for 2026. So yes, we have begun with a bang, and right now Nifty is showing good optimism. We are at 26,300. So now I think for the first time we'll be seeing a very good close, and we expect higher targets. The first target resistance which we would be witnessing now would be 26,450, and from there on we have much higher targets. So it's a wait and watch scenario, buy and dips strategy. And as far as Bank Nifty is also concerned, we are already in the 60,000 zone. So I would say now 59,000 acts as the support, and in all likelihood we would be heading towards 61,500.
Okay, we'll surely be keeping an eye out on those levels over there. And you did see that, alert that came in from CNBC on Coal India. That stock is buzzing away in trade, right? Look at it. Coal India is on track to post the biggest single day gain since September 2023. As of now, 6.5% gain. We'll watch out for that one as well. Let's get started with the queries then for today. The first query for today is coming in from Bharat, who's writing to us from Hyderabad. He's holding 30 shares of Adani Enterprises. Price is 2,455 rupees. Asking if he can add more shares at the current levels. Shahina, your view for Adani Enterprises?
Well, good afternoon and Happy New Year to you, to Vaishali, all your viewers. And let's hope, the rest of the year will be as positive as it is today. Yeah, now coming back to the stock, Adani Enterprises, see, what I like about this group is that they have been able to actually, put in place large infrastructure projects and execute very well. In terms of Adani Enterprises, if you look at the last 3 years, while the stock has corrected actually by, say, 40% from its peak in 3 years, but in terms of EPS, the EPS has tripled from 20 to 60. So actually, if you look at it currently, the valuation looks reasonable. Most of the analysts have put the SOTP value around the current levels, slightly higher versus the current stock price. Now, if you look at what is existing in Adani Enterprises as of now, you have the airports. Of course, the New Bombay Airport that was recently launched is a very big news for the stock and for the company. Airports, I believe, would account for more than half of this current SOTP value. Basically, you have now 8 airports under that business. So if you look at it on comparative basis, let's say compare it with GMR. So on that basis, I would believe at least more than half of the SOTP value or the current stock prices from the airports. Then you have huge investments that are being made in defense, in real estate, and in the data center in which they have the Google tie-up. Now, this, I believe, also, it could be more than, valued half of what is the current stock price or the current EV. So to that extent, I believe the downside from here is now more or less limited or capped. So the upside, of course, will depend on the execution of the remaining projects and maybe some disinvestment of their FMCG business, some cash flow coming from there, and the debt being further reduced.
Okay.
All in all, I would say continue to hold.
Continue to hold. That's the word on Adani Enterprises. Vaishali, the viewers asking they can add more also. Is this the right level, or maybe there are some lower levels, or what should they do right now in terms of the level that they should keep an eye out on?
Actually, yes, I would agree. So one can average at these levels because technically, when we look at it, the stock has fallen right from 4,000, and for a very long time, it has only been consolidating right between 2,000 to 2,600, 700 band. So this level definitely looks attractive because it's pretty much close to the support level. I'm looking at the weekly chart also. The indicators are showing signs of improvement. So for now, yes, average out, look for the nearest target of 2,600, and the confirmation of strength comes only about 2,600 levels. So fair value, technically, one can average at these levels.
Okay, can average at these levels if you wish to. Let's move on then to the next query for today. This is a caller query. We have Praveen, who is on the call line with us. He's from Chennai. His query is on the recent listing that is there, KSH International. Mr. Praveen, you can go on with your query. Good afternoon.
Yeah, good afternoon. In the recent IPO of KSH International, I was allotted 702 shares at the issue price of 384. The issue was undersubscribed and listed below the issue price, though it's a profit-making company. I'm inquiring 10K loss. What is the future for this company? Is it worth holding?
Okay, sure. Shahina, since it's a recent listing, what is the outlook for KSH International? Have you looked at it, and what is your suggestion for our viewer?
I don't really track, new issues closely, but what, of course, as the investors already said that it was undersubscribed, and if he's looking to flip it, then it is better to flip and get out now. About 70% of its revenue comes from power sector, and valuations are not expensive. But I would say that in the shorter term, say 6 months time, a lot of profit booking happens every time the stock goes up. So I don't think it is advisable to continue to hold KSH. Better to take some bit of loss and exit.
Okay, better to take some bit of loss and exit. That's the word coming in on the fundamentals. I'm sure technically, Vaishali, there's nothing to add right now. It's just been a month or so, right?
I'm sorry, no, I can't give my
Yes, absolutely. Okay, hope this answers your query there, Praveen. Right now, Shahina suggested it's better to get out and book your losses rather than just wait on and drag for something in this sector as well. It surely comes in that manufacturing capital goods side. There are other options that Shahina said that maybe one could look at. Thank you so much for calling in, Praveen. Let's move on then to the next query. We have Vijay Kumar, who's writing to us from Bangalore. He's holding 70 shares of Sula Vineyards. The price at which he's bought it is 330 rupees per share, currently making a loss on this one. Now he's asking whether he should book the losses and exit the stock or continue to hold this one. Shahina?
Yeah, so I would say even book out from Sula Wines. Basically, here, despite the fall in the stock, evaluations are not cheap. They have not really been showing a good financial performance if you look at the last 2 quarters. And competition in their wine segment, core segment, is continuing to increase. So it is going to be an issue. They are trying to invest money into and acquire some brands in the other lines, like say whiskeys, etc. But all this is, we have to wait and watch what will evolve. As of now, I would say it's better to switch from Sula. There are a lot of other in the alcohol beverage stocks that she can, he or she can switch to. So it's better to switch.
Better to switch from Sula. That's the word on the fundamentals. On the technicals, Sula Vineyards, what should the viewer do? Hold, book losses, or even average is an option, Vaishali?
average because there's no confirmation of the stock bottoming out. But I would say it's totally like in a deep oversold zone. So now that he's holding, continue holding with a stop loss of 200. Maybe it could give a good bounce and you could get a target of 260, 280. That would be a better price to exit this stock. So I would say have patience, keep a stop loss of 200 and wait for a bounce coming in.
Okay. 200 stop loss, wait for a bounce, and then maybe you can exit. That's the word on the technicals. Next query for today, we have Chandrasekhar, who's writing to us from Bangalore. 4,000 shares of Viva Med is what he's holding. Price is 17.57. It's not a stock that we talk about regularly or even cover regularly, but this is an important query that they have since they are making some bit of a loss here, wants to know whether to hold or sell. Your take on this one, Shahina?
The stock was actually suspended from trading, I believe, for almost 2 years, and it has recently relisted, I believe, in December. Now, post December, I think from 27 on 28, 29 rupees, the stock has seen a one way selling, and it's down to now 15. So I would even at current level suggest that the investor exits whenever he can get the exit, because it is an API, pharmaceuticals, chemicals, specialty chemicals. But if you see the balance sheet, it is very weak.
Mm.
They have got a high debt. The net worth has been eroded. So I would say exit even at current levels.
Okay, exit is the word there. And on the technicals, Vaishali?
I would agree with China because this is also on a downward trend, and I don't think it makes sense to hold this stock.
Okay. Doesn't make sense to hold the stock. Please exit the stock. That's a word on the fundamentals and the technical front for Viva Medlabs. Let's move on then to the next query. We have Komal, who's writing to us from Mumbai. She has invested in stocks like Protein eGov and KPI Green. So she's not given us the exact stock amount. She's asking that should she continue to stay invested in these names? Is it a good bet for the long-term story? Shahina?
Yeah, she's made a huge amount of loss in both the stocks. Now, after this big fall that we've seen in both of the stocks, what I believe is you can continue to hold and look for bounces to exit from both of them. See, Protein actually corrected a lot when they did not get the government order for renewal, for the PAN. So they lost that, but subsequently they have got some order of I believe over 1,100 crores recently, which is to be executed over 6 years, which will add to turnover of around 200 crores starting from for 6 years, starting from the second half of the current year, FY26.
Yeah.
So going forward, I think the second half will be better. So you can hold, look for a bounce, post the numbers, and then review it. I would believe that it's a very slow-moving stock in terms of financials. So you can switch. KPI Green, the only thing bad about it, what I don't like about it is the pledges of the promoter. Huge pledges. Okay, that makes it a bit risky. But other than that, valuations are decent, quite attractive, and they've got a huge order book of about 3,000 crores, which is almost 2 times the turnover. So it looks decent on financial parameters, except for the one risk issue that I've mentioned.
Okay. Thanks for the view there on the fundamentals of Protein eGov as well as KPI Green. Vaishali, what's your view for both these stocks, Protein eGov and KPI?
Well, so for Protein, I would say do not make haste because today's candle also shows some hope. We've seen good correction right from 1,500 levels in the recent past and now hovering at 770. I think the stock seems to be out of its worst. We saw the stock making a low at around 700 levels, and technically it is making a higher bottom formation. Today's candle also shows there is some momentum coming in. So this stock in all likelihood can go towards 850 to 950 levels. So that's where we can have a relook. Right now, I would say hold. And as far as KPI Green is concerned, actually, I'm seeing since quite some time, all the green stocks are getting into momentum. So this really seems to be the flavor of the time. We see NTPC green, all the other green, Inox green. So likewise, this also has begun its momentum and it's currently at above a cluster of support levels. So I would say 440, 460 acts as a very good support. And if this stock sustains above, I think this can go towards 550, 600. So calculated risk, disciplined trading strategy.
Okay, that's a view on the technicals. But on that note, we're going to slip into a very short break. Don't go anywhere. After the break, we'll continue with more of your stock-related queries. Stay tuned in. Welcome back to Your Stocks on CNBC TV18. We still have with us Shahina Mukadam as well as Vaishali Parekh to answer all the stock-related doubts that you all have sent us. Let's move on to the next query for today. We have Sundarsan, who's writing to us from Tamil Nadu. He's holding 8 shares of JSW Cement. This is at a price of 138 rupees per share, so he's making a loss on this one, as well as he's holding a couple of shares of Jyoti Labs. A price is through 348 rupees per share. Wants to know the outlook for both the stocks. Shahina, your view on both the names?
Jyoti Labs, I would suggest book your profits and switch, exit. And JSW Cement, I would say you can hold it for the long term. See, they have during this week itself increased prices in some Western markets by about 25 rupees per bag. Now that is a positive, which will have a positive impact on their earnings for the second half. It's a very good group. They are planning to increase the capacity over the next 3 years quite aggressively from 21 million to, I would believe, 34 million plus. So I would say the long-term prospects are decent. Valuations are slightly on EV by EBITDA basis, slightly higher, but I would say continue to hold. Do not trade. And the second one, Jyoti, basically they have got capacity coming up in the agrochemicals division. But I think, that whole division is not really doing too well. You saw the last quarter numbers where profits were impacted while turnover was flat. So I would believe it's better to switch from Jyoti Labs to some other sector or stock.
Okay, switch from Jyoti Labs, that's the word there, while JSW Cement, you can continue to hold on the fundamentals. Vaishali, your view for JSW Cement and Jyoti Labs on the charts?
So, chartically, JSW Cement is very well placed. One can even buy as a fresh buying strategy. We've seen a good consolidation at these levels, 120, and good support levels also. So, 115 should be taken as a stop loss. And I think this stock, once we see a pickup coming in, volume is pretty decent. We need to see a pickup in volume. So once you have that, this can go towards 140 as a trading strategy. So in my opinion, it's a fresh buy as well and hold if one is holding so. But as far as Jyoti Lab is concerned, well, we don't see any strength or any momentum in this. I would say exit because there is no reversal. It's a weak stock.
Okay, there is no reversals on the technical front as well, so better to exit from Jyoti Labs. That's the word at least there, for both our experts for Jyoti Labs. And JSW Cement, you can continue to hold. Next query then is coming from N. Ganesan, who's writing to us from Chennai. He's holding it 522 shares of Tata Capital at 326 rupees per share. So he's making a profit on this one. Should they continue to hold, sell? What should they be doing? Shahina?
I would say continue to hold because if you look at it in peer group valuation, it is still quite attractive. So the valuations are good. It is from a strong group. In terms of balance sheet, it's got like a loan book of around 2.5 lakh crores. The only issue is that their net NPAs have gone up a bit, basically because of the merger that they took of Tata Motors Financial, that segment of the business from them and merged it. So that as well as their cost of funds has also gone up, which the management is committed they will try to bring it down from the 1%. So I think all these factors put together continue to hold.
Okay, and Vaishali, your view?
Actually, it has given a breakout, and I think for a long-term perspective, this should be hold because 330, 340 now acts as a good support, and this can go towards 400, 420 levels.
Okay, keep an eye on those levels over there for Tata Capital. Next query for today, this is come from Pradeep, who's writing to us from Tamil Nadu. He's holding a few shares of Dixon Technologies, not exactly mentioned how many shares, and he's bought it at 14,121. Wants to know, should he continue to hold or look to sell at the current levels? What is your view on Dixon Technologies, Shahina?
For the last 2 years, I've had a book profits, which that type of a recommendation on Dixon. I think I want to change it for now. I want to say hold and look for, but of course it will may consolidate for some more time because valuations, while they have become attractive, given the sharp correction in this stock, it is not cheap, So to that extent, continue to hold. There you see a huge jump in profitability that is coming up, which I think in the next 1 odd year should start making the stock look quite reasonable at current levels. The mobile business is contributing a huge chunk of the improvement. Now, so I'm still saying a hold despite the management guidance coming down from growth of 45% in revenues to 35%. But I would believe that given the correction in stock price, it looks decent to hold at current levels, given the growth.
Okay. And on the technical front, what is it looking like, Vaishali? And is average an option right now, or maybe wait for some bit more of a correction?
From a larger time period, I think the trend is down. But only consolation is that, yes, it's coming closer towards the oversold. But having said that, I feel still downside cannot be ruled out to the extent of maybe around 11,000 to 10,500. So accumulation would be a better strategy rather than buying at these levels. So I would say from here on, buy at every tranche to average out and get a better rate.
Okay, that's the view there on the technicals. Next query for today is coming from Ramakrishna, who's writing to us from Tamil Nadu. He's holding 5,000 shares of Vishnu Prakash Pugalia at a price of 207 rupees per share, so making a significant loss here. And other is 2,500 shares of Sona BLW Precision, and it's at a price of 477 rupees per share. Should they exit, hold? View on both these names, Shahina?
I would say it is better to switch from both these stocks. We've seen, the stock for Vishnu Prakash, the stock has corrected a lot. Even the same for Sona BLW. So both the stocks have corrected. At the same time, you have Vishnu Prakash that has actually, had lower profits in Q2. It's an engineering construction. So while, it's very difficult to put what valuation is fair valuation for such a stock. It's a very small cap, very micro cap. So I would say it is just a switch from here. Sona BLW, I think the family disputes that are coming up may, put some dampener as to what sort of future plans the company can come up with. While the second quarter was very strong and they are doing pretty well in terms of their sales, for EV and all, the demand is coming up. But a large percentage of their sales continues to be for the US market. So there now, if the tariff issue is not settled, the impact on their revenues and profitability may start showing up in the second half. So I would say it is better to switch from both.
Better to switch from both. That's the word coming in there. But that was the last query for today. We're absolutely out of time. So Shahina as well as Vaishali, thank you so much for joining us as always and answering all the stock-related queries. And viewers, thank you so much for sending us your queries. Keep sending them the queries as well. You can see the number that is at the top of the screen or the email ID, and you can send us your queries there. But as we head into 2026, after a tepid 2025 for Indian equities, what does the outlook look like for the new year? CNBC TV18's poll the most influential market participants to get their views on the market and the economy. Top market experts will also weigh in on the trajectory for the Nifty, while economists have their say on whether India's world-leading growth can continue into the new year. With that, it's a wrap on this edition of Your Stocks. Thank you so much, and up next, your closing bell.